Okay, hello and good morning, everyone. Welcome to Easy Markets Daily Picture International with me, Darius Anucauskas. Today's the 18th of December. Yeah, guys, 18th of December 2023. So, yeah, welcome, everyone. Welcome to this Monday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest, and I'll disappear for a little bit, and I'll be back in a bit. Okay, so now then, also just before we go further, just a quick mentioning of our Easy Markets website, which you can always check out for more information about us, guys. So, yep, feel free to check us out. If you have any questions, you can always reach out to us. Now then, let's jump into the charts. Oh, I just noticed that I have not updated the description list of which instruments I will be picking up on. So let me just adjust that quickly because I do have a few commodities that I really wanted to speak about. And yes, so just a sec. I'll give you a few moments to kind of prepare and, like, maybe get your coffees or something like that if you're, tea. So just let me do that quickly. Okay, so these are the instruments that I'm going to talk about. Bitcoin, Ethereum. Let's just put that one quickly into the... Basically, you can see on the right the instruments that I will be picking up on. And yeah, I mean, you can always see that, basically. I mean, I always kind of throw it out there so for people just to kind of know what is happening there. And yeah, this and that. Okay, let's get rid of this one. And I think I am done already. Just bear with me one moment. Yes, perfect. So let me just throw these out into the description. Yep, there we go, and there we go, and now we can roll. There we go. Now there it's sitting in the description. So those are the instruments, basically, in case you are wondering what I'm going to be talking about, but you can also see them right here. So as always, I want to start off with Nikkei. So Nikkei, from the technical perspective, is stuck a little bit. It's stuck in between the two kind of trend lines here. Yes, I'm watching those both. Look, I'm not saying that one is more one is stronger than the other. No, I mean, they're both tentative, because although this one looks a little bit longer, but still it has a very big area here. And yeah, I mean, it needs some clearances. So, long story short, guys, for now, I am still applying the same analysis, the same game plan, which I talked about, last week. So basically, for my upside, I need to see a push not only above this downside line, but also a push above the 33,200 zone, somewhere around here. For the downside, I need to see a drop below the 32,483 right here, and then we would be falling. Well, we would clear not only the upside line, but also the 100-day EMA, and this potentially could open the door towards that 200-day EMA. However, it would still need to overcome the current lowest point of December near the 32,160, and if that gets cleared, well, a forthcoming lower low will be confirmed. So, as already kind of, as you know from the headline, the heading of this webinar, it's the week before Christmas. Now, in terms of economic data from Japan, Friday we'll get the national CPI numbers. from Japan. Thursday, foreign investment, not a major mover. Wednesday, at the trade balance. Now that's going to be an interesting one. I believe so. The last kind of that's the last trade balance number for this year. However, not the for the last month. So it's going to be for the month of November. So the December one we'll get in January, as logical as usual. But of course, the main event is tomorrow, guys. That's why I kind of went backwards a little bit, because tomorrow is the main event. Tomorrow, we will get the BOJ interest rate decision. So just a little bit about that. Look, last week we had all the other central banks, the ECB, the BOE. We got the Fed. So yes, it was quite an interesting week, I would say. This week, yes, we have BOJ, and the question is there: will we see something out of them, right? But to be honest, I don't think so. I think the year will end like that, and then we will. We'll go into next year and hoping to see more hikes actually from the BOJ, because this is what they're currently examining. Look, BOJ's interest rates are currently sitting at minus 0.1, and I think that given that Japanese inflation is not really falling back into their 2% target, well, it's they're trying to maybe boost a little bit. They're trying to boost it, and they're trying to kind of bring it down. So as we know, the main method of bringing down inflation is, yep, a rise in interest rates. So and that's what they're looking at. So if BOJ does that, then well, that would be a historic move, to be honest. But okay, look, and we could expect the Japanese Nikkei dropping like hell probably. So, but again, I'm not speculating too much. I'm just observing the price action for now. So I wanna see if we can get a clearance through one of my levels, and then we'll go from there. China 50. So this one continues to slide, but gradually continues to slide, and yes, it's giving us it gave us already actually the move lower and a drop below that 11,158 zone. So we're staying below it for now, and yep, as long as we remain below that territory. That's, by the way, the lowest point of 2022. We fell below it. If we stay below that, then yes, my next target is the lower side of the falling channel pattern that I've drawn here. Hoping this is a falling channel. Let's see. But yeah, that's gonna be my next target. For the upside, I need to see a push somewhere back above the 11,400 zone right here, and then yes, we could consider a move towards slightly higher levels, maybe actually, well, slightly higher levels, I think, towards the upper side of this falling channel, and then we'll go from there. ASX 200, so there we go. We remained above this downside line last week, so it's good in a way. It's a positive thing for the ASX 200, so we could still see a move towards that current highest point of this year, near the 7,529. Now look, we have around 2 weeks left in this year, so there's plenty of time for this one to push higher, because look, at the moment it seems like it's forming something, it's stalling. Let's get rid of this. I mean, this is no longer needed. I think that we need to mark this one right there, the current highest point of December, near the 7,473, if we can, or actually 7,474. Let's round it up here a little bit. So 7474. If we can get a nice clearance of that one, this will confirm a forthcoming higher high, potentially attracting more buyers towards the current all-time, or well, actually not the all-time high, towards the current highest point of this year. And then we'll go from there. But in general, this idea still is working out. So, which I talked about this downside line. So as long as we remain above it, then yes, I will continue targeting the upside. If we start falling back below the downside line, back below the 7,333 zone, then yes, more sellers here could join in, and then we'll go from there. Now, in terms of the let's say this idea of a possible kind of, look, I don't know if it's going to be like a bullish flag or pennant here or something like that, but I certainly kind of looks like the beginning of something like that. Yeah, I mean, if that's the case, then yes, I mean, more upside here is possible. Basically, as long as we stay above this downside line, yes, I'm going to continue targeting the upside. We have a nice pole here, so maybe, just maybe, this could work out as a nice bullish pennant or something like that. Now, let's jump into Dow, the US indices. Okay. Last week we had another madness, so yes, I mean, it continued. Look, I mean, look at this. 1, 2, 3, 4, 5, 6 weeks in a row we keep on pushing higher. And to be honest, I don't think that we are very far from my 50% retracement on, extension on the Fibonacci here. On the, sorry, should I say not a retracement, but like a level on the Fibonacci extension. So look, I've talked about this hurdle last week. If you remember, if you watched my webinars, I talked about this, and I talked about this actually the week before. So 38,000, that's what I'm aiming for on the Dow. I mean, look, why not? Why not? Because this was already madness. This, I mean, we created an all-time high. We're still in all-time high mode, but I mean, this is just looking quite good, to be honest. I mean, this is very tempting. I get it. A lot of people are thinking that, hey, maybe, too much. But to be honest, it is already too much. Don't get me wrong. It is already too much. I mean, this is just insanity. What did we make in general from this so far? From this reversal at the end of October till this? Okay, 16.5%. I mean, that is just, wow, amazing. Okay, don't get me wrong. This is not, let's say, as great as this reversal, which we had like at the end of pandemic, or during the pandemic, actually, at the beginning of the pandemic, when we sold off heavily here, and then we just rallied all the way back, and I mean, that was like, wow. I mean, look at this rally to the all-time high. 103, 104% almost. Like, I mean, that's like, yeah, unbeatable for now, I think. Okay, look, 16.5% already. Good. If we go a little bit further north, let's say if we from this reversal all the way towards that 38,000 mark, roughly around 17%. Could be, not far. I mean, so it just basically needs to do a 0.5%. That's it. So we need just a 0.5% in order to kind of, and I'm talking about the gain. I'm talking about here the gain. I'm not talking about just in general, like during the day, but no, I'm talking about the gain here from this October to this 38,000 mark. We're just missing around 0.5%. So hey, it's not much, right? For the Dow, it could do those 250 points easily. But anyway, this is the thing, is that everybody's expecting that, everybody's seeing that. So we always leave an element of the doubt to something like that. When everybody sees something, then we need to be very careful and cautious. So that's why, again, I'm observing this one for now. I'm not really touching it. I'm enjoying the move here. However, I'm not in anything, but yeah, I'm enjoying to watch this. I mean, so this is just craziness. I mean, wow. But anyway, look, of course, it will present itself with a nice opportunity for a short. Don't get me wrong. Eventually, this will have to correct lower at some point, but at the moment, I'm struggling to kind of find, where it can go from where it could go down. Anyway, so the in terms of the U.S. news this week, I think we have the PC. Just let me double check very quickly. New home sales, Friday. So Friday we have new home sales. Yes, that's yes, of course, PC. So we do get the PC numbers on Friday. So keep your eyes on that, both core and headline. Of course, the Fed will be keeping a close eye on that as well. And yep, we let's see if that's that's gonna somehow maybe bring the market back down, because I would say if the numbers come out like much higher than the forecast, then this is what could help reverse the stock market a little bit. Just because, again, maybe this could push away the whole, this could make this a little bit, these percentages a little bit smaller, because look, I mean, before the end of June. Why is it not reacting? Okay, it's lagging a little bit. So we're before June next year. We're expecting 3 rate cuts. I mean, okay, that's interesting. So I already said that last week. I already talked about it, and I kind of mentioned that for me it looks a little bit weird that if you're expecting so many cuts, I mean, that means what? You're expecting a little bit of a... If you want to do so many cuts, what? Are you expecting a bit of a decline in the stock market? I don't know. Let's see. So, it's like because you're kind of trying to be one step ahead, of the event in order to stimulate the economy, in order to be like, to be there ready. So, okay, let's see. Let's wait and see. Now then, coming back to this... looking at this picture here, I mean, okay, the next target is for me is the 38,000, and then we'll go from there. The S&P 500. The S&P 500 is also, look, I mean, it's one of those, it's the laggard among the top 3, I think, because, I'm talking about the futures, by the way, guys. Talking about the futures, I think this one is missing that all-time high yet, so it's like, hey, wait for me, guys. I also want one of those, all-time highs. They say they're cool, and this is what's happening. This is what we're going for. I think 4,808 zone on my futures here is the level here, which was reached back in January 2022. So hey, why not to create a new all-time high this year? And then maybe we'll have ourselves a beautiful head and double top, not a head and shoulders, but a double top pattern, and then we'll go from there. In terms of the, by the way, in terms of the head and shoulders, this could be the case. I mean, look, we could, let's say if we create a top here, that would be, we have the left shoulder, the head, then the right shoulder, we could form something somewhere around here. Maybe actually the way it could play out is actually, let's say, in terms of the head and shoulders pattern, we could see something like this. Why is it like this? There we go. I don't like this color. I like this color. So yes, maybe it's gonna go look back down. This would be the tilted neckline, and then we could rebound and push back up, and then reverse and push back down. So the typical formation. But again, for now, I would say it's a little bit too early for that. Let's first see if we can actually get something like a reversal. At the moment, so far so good. I am targeting that all-time high, and then we'll go from there. I'll take it from there, basically. Maybe we'll reverse, maybe not, but at the moment I'm targeting that area. NASDAQ, so there we go. Of course, this one is an all-time high right now. These are the futures, by the way, I'm talking about. So look, and this is the idea of the head and shoulders pattern that I've drawn last week. So just wanted to see if this is gonna maybe at some point like work out or not. But okay, look, I like this one, but I'm not saying that this is going to happen, because again, maybe this is just going to be like a beautiful theory. Maybe the head and shoulders is actually going to work out differently, where the neckline, for example, will be somewhere here. And that's why I have my arrow somewhere up until this area. This could be nice, of course, but look, for this idea to work out, we need to see a move back below the 16,000. This one right here, well, let me just 16,750. So on the futures, if we do fall back below that, and stay below that, I will consider a move lower than the German index DAX. Okay, this one was an animal last week. Look at this. It reached my 17,060 territory. I spoke about this. I mean, that was my 50% on the Fibonacci extension. Drawn from the lowest point of September of 2022 to the highest point of July, and then to the lowest point of October. So yeah, good idea, worked out nicely, I would say. Now what's next? Next, I think we need to get rid of it. We need to get rid of this Fibonacci extension and have a fresh look. First of all, I need to bring some of these lines away from here and put them right there. That's the all-time high near the 17,100, or almost 200. So 17,200. Let's round it up here a little bit. That's my next, or should I say, that's my target in order to consider higher levels. So look, we had a spectacular move to the upside. We reached this hurdle. Something tells me that this could be a sign of a reversal. Now, we might see a push back up here, but yeah, let's wait and see. For now, I would say if you're looking for some lower levels, then yes, a break of this steeper upside line here would be needed, and also a drop below that 16,866 zone, and then yes, we will go from there. In order for me to go further south, then yes, a drop below the 16,615 territory is required, and then we'll go from there. So basically, I'll go in small steps to the downside, because look, maybe if we are looking at that ABC correction as the Elliott wave supporters try to look at, then I don't know how big will be the the first A wave, but okay. For now, that's why I'm keeping it short and simple. For now, I'm just observing the price action, and watching what's going to happen today, this week, because this week in general, looking at the German index, yes, we do have some European stuff coming out. Look, on Friday as well, and kind of going backwards a little bit, on Friday as well, we do have the British GDP numbers coming out, so that's something for FTSE. I will pick up on that. By the way, from the US, actually, on Thursday, we do have the Philly Fed manufacturing index coming out, initial and continuous jobless claims. Oh, and yes, final GDP readings for US, something to keep in mind. We could see some volatility in there. On Wednesday, from the US CB consumer confidence, together with the existing home sales, crude oil inventories out there, and the German PPIs are coming out. Yep, German PPIs, Britain CPIs, and okay. So the Wednesday, was it Wednesday? Yeah, Tuesday will be an interesting day for Europe. So tomorrow, basically, we have the CPIs, the final CPI readings for the month of November. Not for the year, but the month of November. So keep your eyes on those. And then we'll get the Canadian CPI numbers as well. So I'll get to Canadian stuff in a bit. But yeah, today it's kind of a relatively quiet day, I would say. I mean, we do get the German IFO business climate, which, to be honest, okay, it might have its effect, but I think that the market right now, everybody's watching what's going to happen in the U.S. I mean, are we going more to the upside, and then we adjust accordingly, and all other indices adjust accordingly, apart from Nikkei and China 50, and yes, then we'll go from there, basically. So for now, long story short, I'm very careful with DAX. I am really tempted to see this one reversing back down, actually, but look, if the US will push a little bit higher, we could expect this one also pushing a little bit back to the upside. So FTSE 100, very quickly on that one, beautiful reversal after testing the territory. I've talked about this one, this 7,724.34 zone, beautiful hit. So this arrow can go. I think it can be removed. My upside scenario now will come from a break above this highlighted zone, which is between the 7,724.34 levels, and then my downside scenario will come on a move below this upside line, basically. So long story short, if we are looking for some lower levels, then I would say, okay, the first step would be probably would be this one, to keep your eyes on this downside line, which we have marked here. So if we do drop back below this downside line, then yes, I'll consider a larger correction to the downside towards this upside line drawn from the low of the 27th of October. If that gets cleared, then yes, certainly lower levels could be met. Now, if we do rebound from this downside line, I'm not saying that I'm getting very bullish again, no, but hey, I mean, maybe we'll bounce around here, maybe some other formation will happen, and I will go from there. I'll pick up on that. Oh, by the way, I forgot to put good morning in the chat room. Good morning, everyone. Yes, as always has to be there. So yeah, guys, that's the game plan for the FTSE. Like I said, keep your eyes on the GDP numbers, the British GDP numbers, which are coming out on Wednesday. Yeah, sorry, Wednesday CPIs. Wednesday are British CPIs. On Friday, we get the GDP numbers, the British GDP. So when Wednesday and Friday will probably be the more interesting ones here for the FTSE 100. The US dollar. So after this beautiful decline, we found good support here near these two levels, or near the 101.5560 zone here. So okay, great. Basically, what's next? Well, next is this, that if we do drop below that territory, then yes, I will go further south. I will go further south, and then my next target will be this 100.32 zone. In terms of the upside, well, a break of this downside line here is needed. This one is drawn from the high of the 1st of November. If we can get a nice clearance of that, then yes, great. More buyers here could join in. Maybe, I mean, we could examine some of these levels, but I really kind of don't like neither of them at the moment. I'm still having this 103.21, but it doesn't really mean that I'm going to focus on it very much. No, for the upside, I'm focusing on this downside line. Gold. Looking at gold, this one is, yes, I mean, after a beautiful retracement back up here, we tested that 2040 zone. Look how well it played out. I talked about this to you guys last week, and with you guys last week, and I said that if we do stay and we pop and we stay above this 2040 zone, then yes, great, this could open the new horizon for some higher levels. But look, I mean, it found good resistance. I mean, look at this Fibonacci is drawn perfectly. So this 38.2, this is where we found good resistance, and now we're drifting back down. So in general, if we remain below this 38.2, then yes, I will continue targeting the downside. If we're looking for some lower levels, then well, a drop below that 2010 territory, or maybe actually 2013, which is around the 23.6 zone here, could do the trick for a few more sellers. Let me just actually coordinates, visibility, no, it's not this one. Style, I think it's prices. There we go. I wanted to add this one, so this way a little bit easier, I think. So we have the 2013 zone. Yes, good potential area. That's the 23.6, but I also have this 2010, which if both of those get cleared, then yes, I will go lower. I will go further south here, and then we'll go from there. So long story short, at the moment, look, if we're only judging from this little formation, by the way, oh, this is what popped in my head. That's where I went blank. If this little formation will be seen as something as a bearish flag, for example, if we have a pole and then we're forming these two, let's say another one here, then you know, a little bit of a retracement back up here, then maybe this is going to be a nice bearish flag, and we could go to the downside. But again, probably it's best to keep an eye on this 2013 zone, and then we'll go from there. Silver. Silver is stuck in between the 38.2 and the 50% retracement here on the Fibonacci, so that's fine. And I think, you know what, I really want to get rid of everything, and I want to start fresh, because this is just a bit of a nightmare, too many lines. So let's bring this back here. So there we go. So the Fibonacci is back, and you know what, that's what I'm going to stick to for now. If it's working, why not? So if you're looking for some lower levels, a drop below this 38.2 here would be needed. And if you're looking at some higher levels, then, well, a push back above the 50% retracement here would be needed as well. And then we'll target the 61.8 here, but on a drop below the 38.2, we'll target the 23.6. Logical for now. And then we'll stop doing that once it becomes unlogical, you know. So yeah, that's my game plan. I removed the upside line for now. I mean, look, I will put back if we do see some sort of action here. Maybe this was way too tentative here. Maybe actually it should be drawn this way. So, you know, and actually if it does move lower, maybe we'll see a nice test of this upside line. So, yeah, okay, look, I mean, this is a little bit like this. So yeah, that's with silver. Palladium, guys. I mean, I have looked at this one a while ago. And that's why I've kept my drawings here. So this was what I was talking about. We were kind of stuck in this little range. I said that, look, if we do clear this 1088 zone, I will aim for this downside line. And if that downside line gets broken, then we would break above the 100-day EMA as well, which kind of coincided with that downside line. So everything worked out beautifully. So long story short, now I will continue targeting the upside, and of course my next target is the 200-day EMA. Simple as that. So as long as we remain above this downside line, and I'm not excluding maybe a bit of a correction back down here, but as long as we remain above the this downside line, then yes, I will aim for that 200-day EMA. Oil, which is WTI oil. So look, I've talked about this another idea here. I mean, of this potential maybe kind of inverted head and shoulders pattern. And well, look, so far we're getting a hold up near this barrier, the 72.38. We keep on overshooting it, but we're struggling to overcome it. So I'm not really getting very comfortable with the upside yet. If we do push and stay above it, then yes, I'll aim for the upper side of the falling channel. And then if that gets cleared, certainly yes, higher levels could be met. But at this point, I'm watching this hurdle, the 72.38, and if that gets cleared and we stay above it, then yes, my next target is the upper side of the falling channel. In terms of the downside, yes, a drop below this 69.70 territory is required, and then yes, we will go from there. So look, I will remove this head and shoulder. It's a little bit in the way here. Yes, I mean, there we go, much nicer. So as long as we remain below this territory, below that 72.38, I will lean a little bit more towards the downside. Natural gas, beautiful recovery. Basically, everything worked out nicely. I talked about this idea right here. I said to you that, look, if we do push higher and we do break back above the 2.42 territory, yes, I will consider a move a little bit higher, a little bit more to the upside, towards this downside line. And there we go. We got the move. Now, and then I said that if we get a hold up near this downside line, then yes, okay, great. More sellers here could join in. But look, actually, what I'm really actually focusing on right now is something like this. So we could see a drift back down, but if we stay above this 2.42 territory, hey, maybe, just maybe, this could work out here. Now, maybe I'm a little bit on the bias side, but let's see. I'm really interested in this because, again, this winter has been, well, this December has been one of the warmest ones, actually, and so yes, I mean, let's continue polluting the world. I mean, let's continue throwing out trash everywhere, you know, throwing out those gases and everything, you know, because we need warmer winters, right? I mean, of course. Honestly, like, if you didn't catch sarcasm in this, I mean, then I don't know. But anyway, so and now maybe they're hoping to see a bit of a colder winter, like January and February, maybe even going into March. In general, I will say something that I kept on saying before, maybe not online, but I kept on saying we have a shift in months, in seasons. In my opinion, we have a shift by 1 month. So now, like, summers are longer, but actually they come later. So, you know, we have like a bit of a shift of like 1 month, I would say. So now, like I said, the winter could come actually from the beginning of the year. So it could be January, February, March. You know, that's the new norm of the winter. So I think the world will have to adjust. But again, let's see. Of course, I'm no you know, not a scientist, so what do I know? But I'm just going from my experience, and I'm an analyst, I'm an economist, and I look at patterns. And if I see a pattern, then, you know, if I see a trend, then the trend is your friend. You follow the trend line, and until it gets broken. So far, I'm seeing the trend, but I'm not seeing the trend getting broken. So, you know, that's what I'm saying here. So anyway, yeah, coming back to this natural gas, so look, maybe we're seeing a bit of a boost. Maybe we're hoping to see some sort of like a cooler, colder January, February, maybe going into March as well. So yes, so let's see if that's going to happen. So that's why maybe we could see this reversal, a break of this downside line as well. But first, I want to see if it's going to continue to hold. Maybe we'll see a bit of a retracement back down. If it stay above the 2.42 zone, then yes, another rebound here could be possible. So now then, jumping into sugar. Sugar, I love sugar. There we go. There we go. Looking at this beautiful thing here. Continues to hold, although it really keeps on flirting with this hurdle. It keeps on flirting with this 21.89 zone, but it's struggling to stay below it. So what does that mean? That means it's a strong area of support from which we could see a rebound. But okay, we're not getting a rebound yet, so that's fine. We're gonna, you know, control our appetite. Control our sugar rush. But yeah, look, this hurdle is quite important, and you can see why. I mean, it keeps on breaking it, but struggling to stay below it. So if we continue to kind of, let's say, remain above it, maybe, yes, a bit of a nice reversal here back up could be possible, where I could apply my beloved Fibonacci and kind of aim initially for that 23.6 and then maybe 38.2. Let's see. Corn. So yes, something that I haven't looked for quite a while, and let me get rid of this downside line. It's no longer needed. What I'm focusing on right now is this little range. So this little range is something that, yes, I am going to be keeping a close eye on. So this is right here. This is this right there. So yeah, okay, look, if you want to see some lower levels, then certainly, yes, wait for a break below this this territory between the 400 and 61.62. But at the moment, we can see that we've climbed above the 50-day EMA, and we're currently still sitting above it. So in a way, there's maybe a bit of a chance for a move higher. And from the shorter term perspective, let me just zoom in here a little bit. Maybe, just maybe, we have ourselves a little downside line, which maybe could get broken. Let's wait and see if that's true. Then, well, yes, like I said, it could open the door towards that 100-day EMA, and then we will go from there, and then we'll target the 509 zone, which is around here, which is the highest point of October, and then we'll go from there. Bitcoin, let's jump into that one. Drifting nicely to the downside. So look, I talked about this, and I said that if we stay below the 43,000 100 zone here, we could be testing it, but if we stay below it, then yes, I'll consider a bit of a retracement back down towards this upside line drawn from the low of the 14th of November. And there we go, we're getting that move. So will we get that test? Let's wait and see. But for now, we're getting that move. We're getting that move towards this upside line. So if we can maybe test it, that would be great. But then if we can break that one, I think that would be even better, because we could see a nice drift, a nice correction back down towards the 50-day EMA, towards the 100-day EMA maybe, and then ideally the 200-day EMA, so that people could pick it up here again and then go long. I know, but at this point, I'm like, yes, I'm leaning towards the downside as long as we remain below the 43,100 zone. If we do pop back above it, then yes, I'll consider a move higher, but at this point, yes, it is to the downside. Ethereum, the same story, but of course, we're a little bit closer to this upside line. Again, if we do rebound from it, okay, that's fine. We will, you know, we can consider a move back up, but only maybe a little one, because somehow something tells me we have this downside line now. And if that's gonna, you know, if we're gonna remain below this downside line, then, well, yes, I mean, a larger correction to the downside here could be possible. And another thing is that I don't want to say it, but maybe I'll say it, but maybe there's a nice little head and shoulders pattern forming. So we have our left shoulder, we have our head. Let's go and test the, you know, let's go test the neckline, the potential neckline, and then rebound, push back up, and then kind of form something of a head and shoulders pattern. But again, let's wait and see. Litecoin. So this one's interesting. So there we go. We're still within the rising channel pattern. This one's maybe not as bearish as the other ones. However, look, channels get broken eventually. So if we do clear the lower side of the rising channel, this could open the door towards some lower levels. But of course, if we do remain above this lower side of the rising channel, then yes, I will consider a move maybe back up, especially if it climbs back above the 200-day EMA. AUDUSD. So there we go. Beautiful move here to the upside, and 0.6690 is something that I'm keeping a close eye on, and as long as we remain above this territory, yes, I will consider a move higher. So as long as we remain above this 0.6690, I will continue targeting the upside. In terms of Australian news this week, let me just double check very quickly, but I don't think... we get the RBA meeting minutes on Tuesday, meeting minutes. Yes, so from last interest rate decision. So, yep, then... to be honest, not much. Reserve assets total, and then they break into, yeah, they have a holiday. So on Friday, by the way, on Friday, just to let you know, New Zealand and Australia are Australia is totally off. Is it? Oh no, wait, no, I'm lying. New Zealand is it closes early together with UK. They have an early close till 12:30 their time. No, but Australia will be working, so they have the private sector credit numbers coming out. But yeah, not much. Actually, I think that this pair will mainly be vulnerable to this fella here. So what's going to happen with the US dollar, then this is what's going to happen here with AUDUSD. So far, we're seeing some declines. So in a way, there we are seeing some a push higher here on a push higher on the AUDUSD. So, long story short, if you are looking at some, higher levels here, then yes, there is a chance for a move towards that 0.68 territory, 0.6821, something like that. For the downside, a drop below the 0.6620 zone here, and a drop back below this downside line could be nice. Look, I mean, I have this downside line which I need to correct actually a little bit. This needs to go here. Let me just adjust this. There we go. I think it should be this way. Yep, a little bit. But okay, we got violated. You know what? This downside line no longer needed. No, it's a little bit. It's me like trying to see something where it's not. So I think this upside line is a little bit more logical. And if we do fall back below the 0.6690 territory, yes, I will consider a move to the downside. Now, AUDNZD very quickly. So yes, my beloved AUDNZD. Honestly, I love this pair. Look at how well it's playing out. I talked about this downside line. I said keep your eyes on it, and there we go. We got those tests here. I mean, you can draw this downside line with whichever you want. I mean, both tentative to be honest, but let's keep it this way, the original way. So as long as, I mean, you can see that we've remained below that downside line. So if we are looking at some lower levels, then yeah, there is a chance, because if we do drop and stay below the 1.0773 territory, I will consider a bit of a move lower, but not much actually. Why? Because I need to reuse this downside line, which I looked at previously as a neckline for an inverted head and shoulders pattern, which worked out, by the way, perfectly. But now I can draw this upside line right here. So basically, this would be my target. This would be my goal if we do remain below the 1.0773. And this is, like I said, this is what I'm going to aim for. In terms of the further declines, yes, a break of that upside line then could do some more nice things here for the bears. But for the upside, look, I'll take a very conservative approach, and I'll wait for a break above the 200-day EMA, because so far that's where the holdup happens. If we do push and stay above that 200-day EMA, I will go higher. AUDCAD. So AUDCAD, haven't looked at this one for quite a while, but to be honest, but it's quite interesting as well. Looking good, because we are seeing the 50-day EMA crossing the 100 and then the 200. So in a way, it's kind of pointing more towards higher levels. I am going to stick to that, to be honest, and I will get even more comfortable if we do start moving above these barriers, these 0.9043 and 61, and then yeah, we'll go from there basically. So long story short, if we are looking at some higher levels, then yes, a break above this territory here would be required, and we can go for something like that. Below, above the 0.9061, and then we'll, yes, like I said, we'll go from there. In terms of the downside, well, a break of this steep upside line is required, and then yes, we could see a move lower, but I think that more sellers here could join in on a push, maybe below somewhere here, maybe below somewhere this territory right there, the 0.89. Yeah, something like that, 0.89 zone. I think that could be the barrier for the downside. We could go lower from there. NZDCHF. NZDCHF, yes, I mean, it's quite nice, I would say. It's trying to push higher, and the moment we're approaching this key resistance barrier. So long story short, guys, I mean, I'm going to lean towards higher levels, initially towards this barrier, the 0.5511, and then I will go higher from here. So the moment, yes, I'm keeping an eye on this 200-day EMA. If we climb above it, my next target is the highest point of September, near the 0.5511, and if that gets cleared, I will go further. North. In terms of the downside, on this one, I think that the easier option here is to wait for a drop somewhere below this area. So roughly below this 0.5350 zone. If we do fall below that, we would fall below all our EMAs on my daily chart, and yes, we could then consider some lower levels. Why not? NZDJPY, quick update on this one. I talked about this previously, and yes, I mean, I said to keep your eyes on this hurdle, this area between this 87.95 and 99 levels. So I need to see a drop below that. Just bear with me one moment. My mouth has dried out. I need a bit of tea. Yes, very good. So, that's the little hurdle. That's what I'm keeping an eye on, of course, together with the 200-day EMA, because if we do drop and stay below that, then yes, of course, lower levels could be met here. But at the moment, we are very careful here, and we are observing the price action. So long story short, if you are looking at some higher levels, then maybe a wait for a push above the 89.66. If you're looking for some lower levels, then wait for a drop below the 87.95 territory here, and then we'll go from there. USDJPY, similar story, the same with last week's analysis. I am keeping an eye on this 141.55. If we do drop below it, then yes, I will go lower. At the moment, it's providing fantastic support, so maybe we need to wait for a bit of a some sort of more action here, and maybe the US data will help move the US dollar and eventually move this pair as well. So at the moment, yes, I am kind of keeping an eye on this, and then we'll go from there. If in order to consider some higher levels on this one, well, I would say it's a bit of a wait. It's a bit of a wait because look, this whole area right here is going to be something of a neutral one. If we do break the downside line, okay, great. More buyers here could join in. So if we do break this downside line, so yeah, I mean, for now, I would say if you're looking at some higher levels, then let's wait for a break of this downside line. Actually, it'll be easier. USDCAD, this one is a bit of a pain in the bottom, but look, it's still somewhere near this 1.3380 zone. I talked about this hurdle. We did drop below it. We kind of stayed, but then we're now struggling to, let's say, push further below it. Now, okay, we had a decent decline last week. So maybe a bit of a retracement here could be nice. Let's say, so, you know, let's continue monitoring this 1.3380. If we kind of remain below this, then yes, my next target is the 1.3315. And then we'll go from there. If we are looking at some higher levels, then, well, I think that the safer option here is to wait for a push back above the 1.3417 zone, somewhere around here, and then consider a move higher. So let's leave this area like this right now, and then we'll just, like I said, if we start seeing a move below the 1.3380, then yes, I will go further south. US dollar against the Mexican peso, something that I haven't looked for quite a while. And just a quick update, so a few lines are no longer working. Of course, the same idea is still valid, so 1.17 level is the one that I'm watching. I mean, in order to go lower, so if we do get a nice clearance of that, then yes, I will go lower. For the upside, I would like to see a push above the EMAs here, the 50 and the 100, in order to aim for that 200-day EMA shown as the black line here, and then we'll go from there. GBPUSD, yes, keep your eyes on the British data, which I've mentioned. Check out the economic calendar. We have some important events for UK. So look, in general, I threw out this idea before. I said that, look, this is what I'm considering, and it partially worked out. It just reached one of my other levels here, the 1.28 zone. So if you're looking for some higher levels, I think that the easier option is to wait for a pop above that 1.28 zone. And if we can get that, then yes, I will aim for that 1.29, of course, and 1.30, and so on and so on. Well, and so on and so on. For now, only those two, the 1.29 and 1.30. But for the downside, well, this is where the bid comes in. I would like to see the a drop below this upside line, and if we can get that break, then yes, I will consider a move towards the 1.25 territory, which so far has been a very good area of support. So if we do break this upside line and we fall below the 1.2615, then yes, I will consider a move lower towards the 1.25 territory. This highlighted zone, I think that this is what exactly I need to mark, the 1.25 territory. GBPCHF, so beautiful so far. Look, I talked about this a while ago, about this idea of a range, and we did get a violation of the lower side, but look at this beautiful thing. We rebounded strongly. Now, what's happening right now? From the shorter term perspective, this little formation seems like to be like a bullish flag. We have our pole, we have our little correction, so maybe we could see a move higher, but for that, I would need to see at least a start. A push above the 50-day EMA, and then we'll aim for the 100-day EMA, and if that gets cleared, yes, I will consider a move higher, and then we'll go from there. So that's my game plan here on this pair, on GBPCHF. So yep, and then we'll take it from there. EURAUD is well, it's below my hurdle, my breakout hurdle, 1.6269. So look, I mean, in general, the downside scenario is still valid. So the downside scenario is still valid, and we could still go for that 1.61 territory. Yep, not saying anything. I mean, this is like something that yes, could still work out. But if you're looking for some higher levels, a break of this downside line is needed, but also a push above the 200-day EMA here would be required as well. EURJPY, this one is trying to make its way higher here. I can see that. Yep. I can see that it's trying to make its way back up. Look, we need to see a break of this downside line for sure, because so far that's doing a good job. If we do climb back above the 200-day EMA, then yes, more buyers here could join in. For the upside, so for further upside, I mean, yes, I mean, we have these EMAs here, the 50 and the 100, which are in a little bit in the way. We have this little barrier before that, 157.69 zone, roughly around here. So yes, I mean, we do have some interesting areas to target, but again, a clearance of this downside line together with 200-day EMA is needed. For the downside, well, I think that this this downside line might no longer be valid, but if we do start falling below the 154.37, I will consider a move lower. And finally, EURUSD. So after a beautiful test of this downside line last week, drawn from the high of the 18th of July, we had a nice reversal from it as well. So we drifted back down. We drifted all the way back to this 1.0887. I talked about this before. I said that this was my breakout to the upside, and there we go. We got that. It acted now as a good area of support. So look, if you want to see some higher levels, then yes, a push above the above this downside line is required, and then yes, we'll go from there. For further declines, look, I would say at this point, maybe actually I will take a bit of a risk, and I'll consider a move lower if we do fall back below the 1.088788 zone, actually. So 1.0888, if we do fall back below it, then yes, I will consider a move to the downside, guys. Just a quick update on what's happening here with the treasury notes. They continue to slide, so in a way, there is indication that there could be some more upside in the indices. So at the moment, we're not seeing a reversal or anything like that in the treasury notes, in government bonds here in this yield, government bond yield. So we're not seeing a reversal. So yeah, I mean, there's a chance to see further moves, a little bit more upside in the indices. So that's it, guys. That's it for me for this session. I hope you found it useful. Thank you very much. I know it's not everybody's joining in. I mean, I think this period will be very quiet right now, but look, I'll still be jumping in this week fully. Next week, just to let you know, next week I am I'm only going to be here on the 28th. On Thursday and the 29th. So 28th and 29th, there will be some sessions, but this week fully, yes. Like I said, I'll have the sessions, full sessions, but next week, just like I said, the 28th, 29th, that's when I will resume. But okay, look, I'll mention that as well at the end of this week. So yes, guys, thank you very much for tuning in today. I hope you found it useful. Let's see what the market has prepared for us in the last week of Christmas to Christmas. And then we'll go from there. Yes. So for now, long story short, guys, stay safe. Have your stop losses in place. Risk only what you can afford to lose. Don't overtrade, and everything will be fine. Thank you very much, and I'll see you tomorrow, 7 o'clock GMT time. Bye-bye. Uh-oh, you just broke a digital image, cursing us all to 7 years of market volatility. Undo by subscribing to our channel.